very important, and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning. Good morning. Welcome to all of you. How is everybody on this Friday morning? For some of you, if you're over on the West Coast, Friday afternoon for those of you on the East Coast, and right in the middle of the day for those of us in the middle of America on Central Time. Hope you guys are all doing fantastic today. In your chat, do me a favor, let me know where you're coming from. If you're over on Rumble, go ahead and chat it in there and say, I'm Bob from Idaho, or I'm Larry from California. And those of you over on YouTube, do the same if you don't mind, so we can kind of know where you're all tapping in from. Ready to get into the big weekend. Of course, right now, the market is looking a little bit red, which we're going to discuss here momentarily. And it's going to be a great discussion. Lots to learn this week, lots to learn. And then for those of you who may be joining us for the first time today, we are getting into day number 5, I think, if my computer will operate the way that my brain operates. Uh-oh, it's not going to do it. It's not going to operate the way my brain operates. We're getting into day number 5 of our Pick Winning Stocks Challenge. There it is. There it is. And that means actually what we're going to do today, we're going to cover 3 days worth of content, because in this part of the challenge, day 5 is a relatively short day, and day 6 and 7 are your first weekend. And we'll talk about that here in just a minute. So that's what's coming up. Before we get there, if you haven't liked and subscribed to the channel yet, then please, by all means, like and subscribe. And do me a favor, look up at the top of your web browser. There's a link for YouTube or for Rumble or whatever it is, platform that you're watching on, and copy that and send it to 3 of your friends right now and say, hey, you need to get over here. You need to check out what's going on over at Trade Maestro with these daily live streams. And today, of course, we're getting into day 5 of the Pick Winning Stocks Challenge. So go do that right now. Let's see what we got here. Mia Tango's coming in from, she didn't say, but I happen to know that Mia's up in Canada. Bill says hello from Kentucky. Hello, Bill. And Greg is coming in from Chickasha, Oklahoma. You know, I used to live out there. Not in Chickasha, but I was in Moore for 7 years. Let's see. Nobody's chatting with me over here on Rumble. So if you're on Rumble, let me know where you're coming from so I can talk back to you. And nobody ever seems to chat over on Facebook, so I'm not going to be too disappointed. It's kind of what I've come to expect over there. All right, let's jump in. Let's talk about what's going on. It's a red day. Excuse me. It is a red day. Market is down right now. Dow Jones is down almost 1,600 points, and there's not a whole lot of green in the ocean. Interestingly enough, there's a few green spots. One of them is Nike, which kind of doesn't make any sense, because if the whole narrative is about tariffs, which is what they say, and Nike is primarily making shoes overseas, you would think that Nike would be like, oh no, this is going to be bad. But no, Nike is green. And we've got a few other very small blobs down here. I can't even read them. They're so small. Let's see. What is that? DHI. We got Lin. So a few of the consumer durables are green, just a very small handful. But it's a pretty red day in the neighborhood. All the big boys are scampering, trying to figure out what's going on. So let's talk about that a little bit. And I said yesterday, whenever we have a major news event, or in this case, a news week, I said news comes with a direction, not a price. News comes with a direction, not a price. Remember that? That was a whole conversation yesterday if you were here. And as you look at the market today, this is the Dow Jones Industrial Average you're looking at right now. Isn't it interesting? We gapped down this morning to a price, not based on news, but based on where a pivot was. And look at where we have traded intraday. We are right. We went further than I thought we would go, but I'm not surprised at the structure. This is kind of what we've been talking about all week, isn't it? The market has a remarkable and sometimes, a structure that we can't understand. We don't know sometimes why it happens, but it has a remarkable structure that if you learn to identify and trade within the boundaries, then you're going to be so far ahead because you understand better what's going on. Now, everything has shifted over the last 2 trading sessions. I mean, anytime you have 2 days back to back that are 1,000 points plus, you're going to have a major shift. And of course, 1,600 points represents about 4% today. You typed that in yesterday too, and you got 8% here in just a couple of days. It is not what I would call a freak out moment market crash. It is an intense selling. And now I think we've moved, where are my, there they are. I think we've moved the needle back to where we started Monday. On Monday, we were saying, hey, I think this bearish trend is going to continue. And then we had 3 days that were like, maybe we're not. And of course, after the tariff announcement, come on, little drawing tool. I have great news for us. I'm updating some of my system, and I don't think in a week or so we're going to have these pen problems I've been having. But you can see here, this is what happened yesterday after the tariff announcements Wednesday night, and then, of course, following through today. So it does look like the consolidation that I was so irritated about, that's been going on for a while, we've been wanting it to break. It looks like maybe it's broken. Maybe we're actually getting into some sort of a bearish move, a real bearish move. And the good news for that is it means that, number one, we're not stuck anymore. That's the best news. I do think our next target's probably, if it doesn't stop where it is today, our next target is most likely going to find some support around 37,829. And I don't think at this point we're going to get a lot worse, but if we do, your next major support will be 33,000. Now that will freak a lot of people out. The news media is going to have a great heyday with it. They're going to blame everybody they can blame, everybody that they hate. But it would be a great buying opportunity for all of us. And so let's just see where things land on that front. Take a look over here at the S&P 500. Again, same story as what I said yesterday. News comes with a direction, not a price. We had this gap down this morning, almost to our pivot, not quite, but almost there, and then it just kept falling. And look, if you look to the left, there is a known support. I don't have it marked in here because it's not been a primary support, but we are currently trading at a known support on the S&P 500. So again, the news doesn't bring the price value with it. It brings the direction, and the direction right now is bearish. The big difference between earlier in the week and difference in last week and this week, last week we actually had our momentum indicators that were suggesting the market might be rising. This week, all of those bets are off, especially after Thursday and Friday. And again, I think maybe we've finally broken out of the pattern that was just driving everybody nuts and whips on everybody. The NASDAQ, take a look over here at the NASDAQ. It's a very similar story. Earlier, when I first opened these charts earlier today, we were actually bouncing on this support. In the last 30 minutes or so, it's dropped below, but we're still, if you can see back here, it may be hard to see, there is the bottom of a candlestick right there. It lines up perfectly with where we're finding intraday support today. So I think this is about as good of an argument as we can make that support and resistance work, support and resistance are real, and it supports my discussion that news comes with a direction, not a price. Now, where are we going from here? I think you need to be prepared for more volatility. I've been getting alerts all day from TradeStation that they're limiting all sorts of trade opportunities for futures trading in particular because of the volatility. You need to take a look over at the VIX index. That's VIX. If you haven't looked at that, that's going to be taken off like a rocket, which it's already been doing here. We've blown out of the most recent resistance on that. Now, VIX is a lot different than anything else you'll ever look at or trade. I actually don't enjoy trading VIX for a lot of reasons, but we won't get into those today. What you need to know about VIX is these long upper candlestick shadows, I'm going to zoom in on it, will forecast a lot of times that the volatility is coming to an end. I'll give you a good example over here. I just scooted off the chart, but this was back in August. We had a huge bearish day, and you can see that everybody was freaking out that day, and if you were watching the news, people were like, oh no, this is the beginning of the end. But VIX was actually telling us, no, that volatility is coming back out, and then boom, we just dropped and the market actually took off from there. So VIX is the measure of volatility of the S&P options, and it doesn't tend to stay extreme very long. So unlike what a lot of people think, just because you see VIX going up doesn't mean it's a quick trading opportunity. It does not tend to trend in a direction very long, not at all. So don't fall into that trap. But what it is useful for is more recently, let's come back to current time. More recently, what you're seeing is that volatility is coming in. That means your option is going to be more expensive. It means your option implied volatility is going to be going up. Anything that's related to implied volatility is all going up right now. And so that's actually going to help your long options. It's going to hurt your short options, and all of the related moves that happen with that is what's going on right now. All right. So next week, we're almost done with this week. We got a couple hours left of the trading session today, about 3 hours. And then next week, we will start anew, and it's going to be great. And I have a hunch by the end of next week, we found a bottom and we are bouncing. That's my hunch. But let's let it play out, and we'll find out from there. All right, so I'm just realizing I was not full screen for that whole VIX thing. I'm sorry if that was kind of small and hard to read. What I want to do now is we're going to make the transition over to talking about the Pick Winning Stocks Challenge. And we're getting into day number 5. And today's topic is finding candidates to trade. Finding candidates to trade. How many of you get frustrated because you feel like, I just don't know which stock to buy? I just don't even know where to start looking. And it's a very common problem. It's a common challenge. Same thing with, I'm saying stocks, but it's the same thing for crypto. I mean, how many thousands of cryptos are out there now? And people are saying, well, which one should I buy? How do I know I'm buying the one that's going to take off like a rocket? How do I know I'm buying the one that's going to change my life? That's what everybody wants, right? So what we're going to do today is we're going to talk about finding candidates to trade. And as I indicated earlier on at the beginning of the session, I'm actually going to consolidate 3 days into one. I'm not cheating you out of anything. You'll understand by the time we get to the end of today. But I'm going to consolidate 3 days. Today's day 5, day 6, and 7 should be over the weekend. And so I'm going to put all that together so you have that, because this first week of the challenge has a unique first weekend, and you'll understand that here in just a moment. Next weekend, for whatever days those are, I'm not going to consolidate it. Those are actual full training days. And what we'll do next week is we'll go 5 days live, and then we won't do any live sessions on the weekend. And then day, I guess it'd be 13, we'll pick up the following Monday. So it won't be exactly on the days of the week, but that will spread us out, and that will carry us. If you add everything up, it'll put us a total of 4 days into that following week. You don't have to calculate it all. Just trust me. That's what's going to happen. All right, so let's jump in and let's talk about how do we find candidates to trade. Before I do that, let me see some comments that are in here. Imran says, hello from Nebraska. Hello, Imran. Kenya says, hi from Nashville. Hello, Kenya. Mia says, do we have class Saturday and Sunday? I just answered that, Mia. We do not have a live stream on Saturday and Sunday, but Mia, what we do have, Mia is one of my clients over at Trade Maestro. Mia, we will have our Sunday night profit picks. That's our regular Sunday evening classes we will do. Will not be on YouTube, but it will be live Sunday night. Bill from Kentucky says, Mia, no. Oh, he was answering Mia. Sorry. And then, okay, we've answered all that. All right, fantastic. Let me check over on Rumble, see if we got any comments over here yet. My Rumble folks, y'all are quiet. It's all right. I appreciate you, but you're quiet. I will say this. I said this earlier in the week. Rumble has been the great surprise this week. I decided maybe 20 minutes before we started Monday, I decided to go live on Rumble. And I just thought I'll turn it on. We only had like 5 followers over there, and I haven't done anything to build that channel. And much to my surprise, we've had great response. There's been days we've had as many as 30 people live, which is fantastic. And we've had great replay numbers, relatively speaking. So if you're on Rumble and you haven't followed the channel, would you do that for me? Because I think we're actually up to like 11 followers, which is awesome. And I do want to build the Rumble channel, and I'll start giving you guys some more love over there, because that's on the radar. It's what we want to do. All right, let's jump into how do we find candidates to trade? How do I find stocks to trade? How do I find cryptos to trade? There are over 4,000 publicly traded companies. 4,000. It must be intimidating for you, right? When I started trading in 1999, there was almost 8,000. Believe it or not, that many companies have either consolidated or left the publicly traded market space, or gone bankrupt or whatever. But today there's about 4,000 publicly traded companies. I think you should just trade them all. Just kidding, right? You only need a handful, and this is something that really is such an important lesson to learn early. New traders feel like you got to go out there and just scan through all this ocean of trades, and you don't. And it doesn't matter if you're doing stock, crypto, either one. You need a handful. You know, a very small handful. And generally that number could be as little as, 8 or 10. You just don't need a lot to trade. You need to pick a handful that you like and start working with those. Here's how I do it. Okay, take this for what it's worth, but here's how I do it. I almost never have more than 10 to 12 trades at any given time. And that's actually a pretty big bag, if you will. I see people, work with some people, worked with one girl one time, and she had over 45 stocks that were open trades. And I'm looking at her account, I'm like, how can you track any of this? Like, this is way too much. You can't keep up with it. So 10 to 12 is a good number for the high end, okay? And then adding into that maybe 1 or 2 index-based trades. What I mean by that is SPY, SPY, which is the S&P 500 index, or maybe SPXL, which is a 3X version of that. QQQ, DIA, maybe IWM if you want to trade the Russell. But 1 or 2 index-based trades, and you don't need more than that because it's too much exposure to essentially the same market move. So if you're trading SPY and QQQ, you don't want to then go load up on Diamonds, DIA, and IWM. Because what you'd have is you'd have an irrational exposure to the exact same market move. And I say irrational, I probably should just say irresponsible. And I know why you're doing it. It's rational. Just not good money management, okay? So it's an imbalance of risk to take on more than 1 or 2 index-based trades and 10 to 12 individual stocks at any given time. You can follow the same principle for crypto. Now, some of you like to, in the crypto space, just buy and hodl, meme coins or various coins that you're not ever going to sell. You're just, it's a gamble. You're just buying it and saying, let's see what happens. I'm buying a few thousand for a penny, and you say, I'm just going to hold them. That's a different story. If you want to have a bunch of those and you're just kind of rolling the dice, that's a different story. But if you're actually being very intentional, let's say you're trading intentionally Bitcoin, Solana, XRP, you've got a basket of crypto that you're really trading, I would keep that number to probably no more than 10 to 12. We have 5 that we actively follow at Trade Maestro, and I have a watch list of 15 that we follow, and I'll share those with you before today's over. All right, I usually follow a few stocks, and I choose from those. So here's how that gets. Here's how that goes. Sometimes I get a hot tip, but I should answer that too. I should address that. As far as a hot tip's concerned, you never follow a hot tip. You investigate. Never follow a hot tip. You go analyze it, and you investigate it. I got a client that I'm working with right now, a private client. She bought a company that's actually a great company, but she bought it exactly the wrong time, and she lost a fortune on it, and she was so upset about it. The reason she did is because her friend, who used to work on Wall Street years ago, but I don't think she was actually a trader on Wall Street. She was just a friend I don't know what she did, but she did something. She told her, hey, go buy this and just hold it. It'll be fine. And then my client, she just did it. She went and bought it, and then the trade proceeded to tank. And now she's like, well, my friend told me to do this. Well, don't just follow what your friend told you to do. If your friend told you to jump off a cliff, would you do it? Yeah. No, you wouldn't. You'd at least investigate a parachute first. I hope, right? So maybe if you get a hot tip, that's fine. Just go investigate. All right, here's where I think you should start. Build a list of about 25 stocks that you kind of like and put them on a watch list. I'm going to give you some criteria here in just a minute. Put them on a watch list. Here's the good news. Now, for those of you who have gone through the Pick 20 Stocks Challenge on the website, I actually have a list that I share with you in the bonuses section. I can't really share that as easily on YouTube, but I'm going to still give it to you. You're just going to have to write it down. I just don't have a page that I can say, come reference this for you. Okay, and then routinely, what you need to do every week or even more frequently, work through the list and look for trade setups. It's a really simple process. I mean, it's just not hard at all. You just build a list of 25 stocks that you like, put them on the watch list, and every week you work through them. Here's the process for working through them. This is what we do on Sunday nights too, by the way. Process is quickly look at each stock, look for the opportunities that appear based on what you learned this week. And what we're looking for is we're looking for trend continuations and trend reversals. Those are the primary two patterns we're looking for. And we're looking for pattern breakouts. Trend continuations, trend reversals, and pattern breakouts. Okay, now, that all seems heady, nerdy, hard to follow because we haven't put it into practice yet. So let's go do that right now. What I want to do is I want to take you over to TradingView. And the first thing I want to share with you, actually, you know what? I think I can do this. Well, it's all right. I'll walk you through it. At Trade Maestro, I don't think you can see this, but I'm going to try it. At Trade Maestro, every week we work through what we call our top 10. These are our top 10 right here. I'm going to give them to you right now. You ready? Apple, Avgo, Caterpillar, HD, Lulu, Netflix, NVIDIA, Palantir, Qualcomm, and Tesla. These are all ETFs. Okay? Those top 10. Now, here's the thing about the top 10. The top 10 are great trade candidates. I did not say go buy them. Sometimes the trade opportunity is not a buying opportunity. Let's take Lulu, for example. Lulu has been a fantastic performer for us over the last couple of years. Okay? We started trading Lulu way back when. Here, let me get rid of some of this. We started trading Lulu way back here in 2022 and 2023, and we rode these bullish trends up. And you can still see some of our old trade setups in here. Okay? This was the reversal up here. This was our last chance for a bullish trade. It never triggered. We never got into it. Started taking bearish trades. We took bearish trades all the way down. I think we probably took 9 bearish trades on here. All the way. Just traded straight through our grid. Then when it hit the bottom and it started reversing, last summer, I started telling people, hey, this thing's hitting the bottom. We're not sure when it's going to reverse, but start preparing. Our first major entry, some people took the very, very bottom, but our first major entry in our profit picks came in late October, November. And you can see our targets. We traded to them and beyond them. We reversed again, and you can see, I've taken some of the trades out because it gets so messy. I have to take them out after a while. But you can see our more recent trades. We had one here, we had one here, and we had a bearish entry here. And look, we're within pennies of one of our targets. This was from last week, by the way. That is a lot of trading opportunity up and down. Okay, if you add all that up, most recently with our first bear entry, looks like it came in around 351 and we're down to 240. That's $110 of trading opportunity that we've captured most of it. Over here, we had an entry at 298 and we traded, depending on when you got different trades in, 359. So that's another $60, $70 worth of trades that we took on that bullish move. During this bearish move, we had so many, I can't even count them all up because we double dipped and triple dipped all sorts of times. But I know we got in after the gap. So we'll say around 395. And this was our bottom target down here. But we'll say we took everything at the orange one. We'll say we went a little early. That's $150 on the downside. Over $200 worth of trading opportunities and trade setups on Lulu. But if you just went out and bought it, you would be miserable. If you went out and purchased Lulu and hodled, right now you'd be saying that I'm the worst person in the world. Because you would say, I didn't do this, but you'd say he recommended Lulu. I didn't recommend Lulu. I don't recommend stocks. I don't. What I do is I do trade setups and I show you how I'm thinking about them. If you guys decide you want to do something similar, then that's going to be up to you. I don't give trading advice. I teach people how to trade. So when I'm looking at this top 10 list, what I wanted you to understand about it, this top 10 list is not a, hey, go out and buy these stocks. Be very, very, very clear. It's not what I'm saying. Okay? What I am saying is this is a good list of candidates where good trade opportunities show up and they show up frequently. Okay? So we trade Apple almost every week, but I didn't say we always buy Apple. Sometimes we short Apple. Okay, but we do trade it almost every week. This was our bearish trading opportunity from Sunday night. Look, a bear entry this past Sunday night in our profit picks class, 215 bear entry, and we just blew right past our target today, 196. It's $20 a share. $20 a share worth of opportunity this week, okay? We can just go through ad nauseum all these different stocks and all the opportunities. Avgo has been a great performer. What we're looking for, and I'm going to kind of give you some criteria here. What I look for in the stocks that we trade is we look for stocks that have a lot of volatility. And by volatility, I don't mean they have high implied volatility. They move a lot. That's what I mean. We are looking for stocks that move a lot because the more a stock moves, the better trading opportunities that you can have from that trade. So you're looking for stocks that move a lot. The reason people make a lot of money with crypto is because crypto, depending on which ones you buy, moves a lot. But let's say that your crypto that you purchased looked like Lulu, and it's up and down and up and down, and it goes up $200 or $300, and then it goes down $200 or $300. You're miserable, and you're like, I can't ride this roller coaster anymore. And you're right. And that's why HODL, buy and hold forever, that's why it's a bad philosophy. Because you end up on this emotional roller coaster, constantly going up, constantly going down, and you're frustrated all the time. Okay? So the top 10 is a great place to start. I do have a top 25. I'm not going to go through all of them. I just gave you the top 10. I would start this weekend with the top 10. If I were you, that's where I'd start. And looking for trade opportunities and start charting, start using your moving averages like I taught you this week with the top 10, and then you can evolve it from there. Now, in addition to what I just went through, I have a Crypto 15, and out of the Crypto 15, we have a handful that are kind of our top 5 of the Crypto 15. So again, I don't think you can see them because it's microscopic. Although I'm working, I think by this time next week, I'm going to have a higher resolution stream so you can see some of these fine details a little bit better. Because if you take right now, if you take the stream I'm sending out full screen, it might get a little grainy. So I hope by Monday to have that fixed. But coming in here, here's our kind of our top 5. Bitcoin, I'll write them up here. Bitcoin, Ethereum, XRP, Solana, and I have XLM on the list, but we have just recently started adding ADA to our top 5. So I guess it's a top 6 now, and kind of putting less focus on XLM, but that's kind of the top 5 or 6 that we tend to look at every Sunday night in terms of crypto. And the reason for this 5, I did not do this with this plan, but it worked out this way. The reason that I use these 5 now is because these are the 5 that the Treasury Department and Trump have said they're going to start holding as reserve for the U.S. Treasury. Okay. Now, I actually pulled the 5 out first, and then they made that announcement, and that's why ADA has made it into the list because ADA was one of the 5 that the Treasury Department said they were going to start following, or they were going to start acquiring. So those 5 are the ones that essentially the government has put their stamp of approval on and said, we want to start buying these and we want to start holding them and we're going to use them as part of the National Reserve. Well, in the case of Bitcoin, in case you don't know this, Bitcoin only has 21 million and the U.S. government says they're going to be buying 200,000 a year for 5 years. Well, that's 1 million Bitcoin. That's almost 5% of the total available supply. U.S. government's going to buy 5%. El Salvador's already got, I think, 1%. How many more countries are going to buy up? I don't know. But, you know, if you think that Bitcoin is going to get stuck at 83,000 with national sovereign funds coming in and using Bitcoin as a national reserve, at least to some level, you know, you're kidding yourself. It's not going to stay at 83,000. Now, is 13 million Michael Saylor's forecast? Is that real? No, I don't. Oh, I don't know if that's true or not. Forget what I just said. Maybe. I'm saying just it's not necessarily real just because Michael Saylor said it. That's what I'm trying to say. Okay, now, it may happen. Very well may happen. But that's not why you buy it. You buy Bitcoin when it's a good deal because, you know, you believe in the project. You believe in the fact that so many people are buying into it. Now, we look at the chart, and here's how the process works. So let me come back to my slides for a minute. Said, here's the process. We quickly look at each stock or each trade, look for opportunities that appear. We're looking for trend continuations, trend reversals, and pattern breakouts, right? So let's do that now and show you kind of the process that I go through. And I do this every Sunday night live in my profit picks, but I'm going to kind of walk you through it right now. See if I can push the right buttons. So if I look at Bitcoin right now, it's not really a good buying opportunity. Now, I know if you're a Bitcoin enthusiast, you're going to say, he's an idiot. No, I'm not. No, I'm not, because we traded Bitcoin from down here and we got out up here and we made the profit. So while many of you, I'm not saying you, but many of you Bitcoin enthusiasts, you like to tell me that I'm an idiot, you guys rode the whole wave and you're down $20,000 a Bitcoin right now and we're not. So, if you like the roller coaster, that's great. I personally prefer to go to Six Flags and Dollywood and King's Dominion for my roller coaster thrills. I don't like to do that in the market. But if you're into the emotional ups and downs and trauma, I don't care. That's really it's your emotions, not mine. But for me and my crypto account, I like to buy when the trend is moving and get out when the trend stops moving. And there's several reasons I would get out. I'm going to teach you more as we go further. But, whenever the moving averages all cross and we're above the averages, I taught you this week. That's a buy signal. And breaking out of resistance levels, those are buy signals. When we hit a resistance and then we get there again and we start to fail, that's a sell signal, right? When the averages are red and we're moving below the averages, this is with my Maestro moving average plugin that we created for TradingView. That's how it got red in there. But whenever it's red and we're moving down, it's a non-buy for sure. And depending on what you're trading, it might be a sell, it might be a short. I don't like to short crypto. I've never shorted crypto. Okay, and I can't trade options on crypto the way I want to. So I don't do bearish trades on crypto. I just ride the bullish trends whenever they're there to be ridden. Okay? But, with this theory, let's take a look at Ethereum. Ethereum was a great trade in November. I bought some. I traded it. I got out up here. So I got in around 2,700. I got out around 3,600. 3,700. Now where is Ethereum? It's at 1,800. Now I like Ethereum. I really like it. But it's not a buy right now. Right now it's a sit on your hands and wait. Would you rather, let's say you put $1,000 in here at 2,700 and you doubled it, so now it's worth 2,000. Would you rather take your $1,000 profit, so you got a $2,000 account, or would you rather watch that $2,000 account that you had started as 1,000. I'll write these numbers up here. Now it's worth 2,000. And now after the whole thing is retraced, it's worth about 500. Can't read that, but yeah, we went from 2,700 down to 1,800, so it's worth about 500 or 600. Which one would you rather have? People say you can't time the market, and I'm telling you, we did it. We do it. We did it, and we do it. XRP, same situation. Right now, we had great buys on XRP, 10x our money basically. And on the backside over here, we're just waiting. It's not a bad crypto. It's just not the right time to be buying and riding the trend. Okay? So this is the process that I would go through. So every one of these so far that we've looked at are non-starters. Okay? I love Solana. I cannot tell you how much I love Solana. It's not a buy opportunity right now. Not today. Might be in a week. But today, based on the way that I trade, it's not a buying opportunity. And really, most of crypto isn't right now. It will be. It'll be back. Let's go back to our top 10, and I'll kind of work through how we walk through these trades. So with Apple, this was the trade that we did Sunday night. Is this helpful, by the way? I realize I've gone very quickly this week. I mean, I hit a lot of meat, and I haven't given you the full trading system yet, but you have enough. And now I'm kind of showing you the whole process. So with Apple, we look at this, we say we're below the averages is crossing down, set up an entry 215, our targets are 196. Boom. We know where we're going. It's a bearish trade. Now, there's a lot of ways you could trade this. I encouraged some of our people Sunday night, you could buy puts. That's a good way to trade it. You could sell short. I'm not a huge fan of selling short. I'm not against it. I just don't generally do it a lot. But what I often will say is, consider other strategies, such as, in this case, a bear call spread option strategy. Option spread is a great trade for this. And I think I had a lot of our clients that did that this weekend. Some people want to do other types of option selling strategies. It's a good option. It's a really good choice in a market like this. In fact, the last several weeks, I've been suggesting a lot of option selling. Now, I don't give specific strategies. That didn't come out right. I don't sit here and say, go do this. Okay, what I say is, here's some opportunities. And what I'm intending to do is empower you to recognize the opportunity. I'm kind of coaching you through that. And then you're going to go apply the strategies that work for you, the ones that are in line with your personality. Okay. Avgo was another bearish trade. We started our bearish trades on Avgo at 214. We just blew through our ultimate target of 160, and we're sitting down here at 140. This has all been in the last 2 months. When the market's freaking out, when people are like, oh, the tariffs, they're so terrible. Or it creates great trading opportunities. There's been some really good opportunities this year, folks. Really, really good. And you can see it right here. I mean, I didn't just come in here and draw this stuff. I got the recordings to prove when we did this. My pen was acting up then too. There was our entry on it. Here was our first target. It bounced. There was our second entry on it. This is what I'm talking about with a continuation. When you see the continuation, you jump in. We traded it right past our first target to our second target. It bounced a little bit, and now it's just falling right through the floor. Most of our people probably took their profits at the second target because that's what they were planning to do. I always teach trade your plan, but inevitably some people don't. Let's see. NVIDIA has been a big hot one, big hot mess. NVIDIA made so much money for us last year, and I have so many people that love NVIDIA. I got one of my dear, dear students. I love her dearly. She works part-time for NVIDIA. She's a trainer for them. She loves them. She's always telling me that NVIDIA is going up, and she never likes it when I tell her it's going down. I said it Sunday night. I said, look, we're going down. We're going to this target. She didn't like it, but if she's watching right now, and she might be, there it is. There it is. I told you it was going to happen. So that was a huge opportunity from 113 to 92 in a week and a half, 2 weeks. Folks, when the trends set up, this is what I'm talking about all week. I've been talking about trading with momentum. When the trends set up and they show where they're going, ride the trend. It just so happens we're in bearish trends right now. We're bearish movements. Okay, these are all from our top 10. These are all trades we set up. Here's a great stock, Palantir. Absolutely love it. We put in our top 10 last year. It's been an absolute gem. As much as I love it, it's a bearish trade right now. And look at where it's at. Okay, so our entry on this was 82.50, and it's falling, and it's falling very quickly. Okay, right now, most of our trades are bearish trades, but we do both directions. We do bullish and bearish, and there's different strategies for all of it. So I hope this is all making sense for you. When I go through this process, quickly look at each stock. It doesn't take any time to do it. It really doesn't. I do this every Sunday night. I'll go through, I'll do a market overview, a little bit more in depth than what we did today. I do that every Sunday night in our profit picks. And then I'll go through, we have an ETF portfolio that we go through every Sunday night. Right now it's sitting in cash because the market's not friendly for it, but we go through it. Then we go through some commodities, go through gold and silver. We go through our top 10. Then we do new trades for the week, new trade ideas. I generally pull out 5 at a minimum. I do all that in an hour to an hour and a half. Now, how many of you, if you're new to trading or if you've been trading and having bad results, how many of you could go through and do 20, 25 trade setups in an hour and they're right? And you know with confidence that they're right. That's how fast the process can be once you learn to do it. I can go through, I I literally, before our profit picks on Sunday night, I will look at over 250 stocks every week. And I'll pull out the trades that I want to talk about every week. And you think, well, that should take you all weekend. It doesn't. It takes me about an hour and a half. That's how fast it can be when you learn the process. All right, let's move right along here. Let's talk about some trade idea services. My profit picks class, I've kind of been talking about it. I do that every Sunday night. It's part of the Trade Maestro membership over at trademaestro.com. There's a company called Market Gauge. I'm big fans. I'm good friends with them. I haven't actually talked to Keith in a while, but I really love a lot that Market Gauge does. So if you go over there and you buy their service, tell them I said hey, and they'll say hey back. Other services that are out there, there's tons of them, but you need to be aware when you follow a trade idea service, you need to see it as an idea, not as I'm following it blindly. When you see trade ideas, it should be something that puts it on your radar for you, and then you can go do your analysis and you can decide. Because there's a lot of different people have different philosophies and strategies and techniques for trading the market. Some people's idea for a trade setup is not going to jive with my trade setup idea. I love the guys at Market Gauge. Keith and Mish are fantastic. When we get together, which we haven't been together, I think, since before COVID now, but we used to get together, and we would have these just fantastic conversations, and I really love them. But when they issue their trade ideas, it's going to look different than mine because their setup and their system is different. It doesn't mean it's right or wrong. It's just different. And so if you're going to go with a service, you need to understand what their system is so that you can understand what their ideas mean. Okay? Same thing with me on Sunday nights. If you're going to come to my Sunday night profit picks, you need to understand my system so that it makes sense to you. All right, let's talk about some software ideas. TradingView, and I'm going to share this with you just momentarily here. TradingView has a very good scanner, very, very good. Any major charting software should have some sort of a scanning opportunity. Your brokers will have some. There's a website called FinViz that has some pretty good scanners. And those are some good ideas for finding trade candidates as well. Although I think starting with my top 10 is a perfect place to start. There's a website called TradeIdeas.com. It's a top-rated website. It's pretty decent. I don't subscribe to it, but it's pretty decent in terms of finding ideas. A company called Dynamic Trend is a great scanning service. VectorVest, TradeShark, these all have very good trade scanning services and softwares that will work really well for you in terms of finding new trades. All right, let's come over to TradingView again, and I'm going to show you in TradingView, it used to be, and it still is for the next few weeks, that our scans were at the bottom down here where it says Stock Screener. And I said every week I come in and look at a couple hundred stocks. This is how I do it. I use the TradingView scanners, and I have a couple of scans set up. You can see it says the old screener's disappearing soon. So I'm going to show you what the new one is. But this is my bearish scans, and it's brought up 221 matches, 221. Before every Sunday night, I will go through, for this Sunday night, because everything's bearish this week, I will go through all 221 of these stocks, every one of them. And I will look at them before we do our class Sunday night. Sunday night's on Zoom, by the way. It's not on YouTube. I'll go through them, and I will make the decision if this is one that I want to put on our list. So let's just start with Agilent here. And this is kind of how I work through it. And I have a criteria that I've set up to find these candidates. Okay, Agilent's really gone a long ways. It's almost at a support. I'm probably not going to chase that. We've already looked at Apple. I look at AbbVie. This is a good candidate for Sunday night. This is a really good candidate. Okay, so when I look at this remember, this is a bearish scan, so I'm looking for trades that are reversing with bearish momentum. AbbVie, that's ABBV. You can see I've traded to a peak. I pulled back. I rallied. I failed that rally. I'm dropping down below my averages. My averages are starting to cross. This is the beginning of a reversal. So this is the kind of trade that I'll pull out for a Sunday night profit picks. And then I'll do the analysis on it. We'll do the trade setup on it. And when this thing's all done, you'll have an entry down here. You'll have a couple targets, and you'll have your stop set up. So you know exactly where you get in, where you get out for a profit, where you get out for a stop loss. Okay. And I'll go through all of these. But if you're looking for stocks to trade, this is a great scanning system. You can set up as many criteria as you want. You click on the filters here, and you just set up your criteria of how you want your scans to go. This is a bearish scan. Let's go to our bullish scan. You can see there's not very much in here. This is our momentum scan for bullish. Only 12 stocks came up. Only 12. Okay, so I'll go through these for Sunday night too. I don't think we're going to have any. Let's just see. Dollar General. Actually, Dollar General is a good setup, and it very well may do well because in bear markets, Dollar General tends to do really well. So I'm going to say that. I'm not going to spoil all this for Sunday night. Yeah, that's how I go find trade candidates. And then you say, that's the old way down here at the bottom left in the stock screener. That's the old way with TradingView. The new way, they've moved it over here to the right. Looks like a little radar. And, nope, I can't have my face on top of it. You click on the little radar and it's going to pop out now. This is the new way we do it. And so you set your criteria in here and then it comes up with your list. So I am generally slow to transition. It's a personal flaw. I get a workflow and I really like it, so I tend to stick with it. But they're getting rid of the old system for scans and they're moving to this one. And the way that it does the filtering is a little bit different. But I'll just set up the same criteria. We'll get the same results, and this is how I'll do it moving forward. So yeah, there you have it. That's how I find trade candidates. Okay. Do we have any questions about that before we move on? I meant to say this at the beginning of the class. How did I forget? If you have not downloaded the Ultimate Trading Cheat Sheet, you are only cheating yourself. This is a great transition, by the way. I'm going to paste this into our YouTube chat. I'm going to paste it into our Rumble chat. And I'm going to paste it into our Facebook chat. And now I'm going to share it with you. When you download this, here's what it looks like. It is a PDF that looks like this. And essentially, everything I talked about this week is on one page. So this is the Ultimate Trading Cheat Sheet. 3-step. Here, I'll hide that. There it is. Okay, it is the 3-step trading system, step 1, 2, and 3. We talked about this yesterday. Analysis, strategy, risk management. And then it breaks it down into the 5 disciplines of trade analysis: support and resistance, moving averages, chart patterns, candles, and indicators. Breaks down the strategy and the risk management. Okay, that's the first page. The second page, we got 5 rules for consistent profits. Trade with the trend, know your plan, cut your losses fast, leave your ego at the door, never hodl. Most common mistakes. Quick reference here. And then I've got your links, your essential trading tools. So your charting software for TradingView. If you want to do practice trades, which you need to do, you can do that in TradingView as well. A couple broker links, a couple links over to some more my exclusive indicators and whatnot. And then this, I haven't shared it with you yet, but I'm going to coming up in a future lesson here. This is the trade execution checklist. So this is kind of what we've been working through all week. Pick a stock. We just kind of went through that today. And here's the criteria. The criteria of when you scan, you're looking for good volume. It needs to be optionable. You're looking for option open interest if you're trading options that is over 500. I'm looking for 30 to 50% a move, 30 to 50% per year move in the stock at a minimum. Love it if it goes 100 or 200% in a year. You're avoiding earnings, IPOs, stagnant stocks, and irrational trading behavior. Step 2, we're going to analyze it using the stuff that we just learned this week. Step 3, we're going to pick a strategy, bullish or bearish. Step 4, this is how we exit. We haven't talked about this yet, but you will. And then the last part is your money management piece. All of that is on one PDF. I mean, if that's not the Ultimate Trading Cheat Sheet, I don't know what it is, which is why all of you need to go download that because it's ultimate. All right, before we're done today, I want to really quickly go through the last 2 days of the week. You say, can I do that? And the answer is yes. Because in the recorded Pick Winning Stocks Challenge that I do, the one that's on the website, and I'm pulling these slides up for us here, during the first week, because I go through so much core training in the first 3 days. By yesterday, I'm telling you need to go practice this. I don't want to give you more stuff to blow your mind this week, right? You need to go practice it. Today, I'm kind of teaching you how to go pick a trade in terms of scanning for it. Well, here's what you need to do this weekend. This is the weekend for week 1 of the trading challenge is to go back through everything, catch up, and review, and just review, practice. That's what the weekend is. So it's a very, very fast weekend in terms of training. The video is very short. If you were to watch the recorded version, I think it's like 15 minutes. So I'm going to go through it with you really quick here. Here's what we've talked about this week. What we've talked about is we've talked about the main outcome, which is to identify stocks that can win, know how to play them, and lock in profits and limit losses. And we've done pretty well working through that. We said that picking and winning a stock is not about finding the next stock that's about to have explosive growth, but rather it's about identifying trade opportunities and executing an appropriate trade for that opportunity. And we started with kind of the basics here. The key in trading is to buy low and recognize the opportunity to sell high and lock in our profit, or to recognize the opportunity to sell high and buy low. We're just simply doing the same trade series, but doing it in reverse. We talked about the 3 market cycles of accumulation, public participation, and distribution cycles. And we learned how the informed traders are buying at the bottom in that accumulation period. As that starts to build up, the public comes in, drives us to the next kind of pivot area, the next primary target that we're going to, and then those same informed traders that started to move, they come in and start closing their positions and kind of define the top of the market with a distribution period, which eventually leads over to a new public participation period, which is a bearish one, and it drives us back down to a new accumulation period. And that's the market cycle. We learned all of that on day number 1. Day 2 this week, we talked about how do we know when we should or should not buy or sell a stock. And I introduced you to the chart, the price chart. And we started understanding that this is all the historical price information about the trade that you're trading. And we can use this to identify your key turning points. And then I taught you the key ideas for the week, which were support and resistance. And we learned that support is the price point where a stock finds more buying pressure than selling pressure. And the buying pressure drives the price higher. Same is true for crypto or anything else you're trading. And we learned that resistance is the price point where a stock finds more selling pressure than buying pressure, and the selling pressure drives the price lower. And then we got into market structure and support and resistance. We talked about how this concept of support and resistance is the basis for market structure. You've been learning this all week and seeing it all week. And we said if you can just learn these key points, the ideas of pivot points and turning points of support and resistance, if you can learn them, you can and will beat the market. Then we went into the details of how to do it, and I taught you start with a line chart, you look for 2 or 3 points to start drawing your lines, and after you've marked your charts, then you flip over to your candlesticks. That was day number 2. Whew! I mean, that right there should have been a week's worth of content, right? But no, we're not done. Day 3, we got into how can we catch the explosive trade, and I introduced you to several schools of thought, and I shared my discovery, which is trade with the momentum. If you identify the momentum of the trend and you look for opportunities to join that momentum that's already in progress, you're going to be a lot better off. And then I introduced you to some introductory Dow theory with primary trends, intermediate trends, and minor level trends. It seemed really complicated, but we said, you know, it's really not complicated, because what can we do? First of all, recognize that the primary trend is easy. You just look at the chart and see which direction it's going. Then the intermediate trend is the ebb and flow. It's like the up and down. And the minor level is the day-to-day price action of the chart. So when we look at a chart like SPY here, this line chart, that's a minor level trend. But you can easily just zoom out and you say, well, where's the primary trend? Where's the big picture trend? It's right here. Then we say, where's the intermediate trend? Well, it's the up and downs that are working with the primary trend. And where's the minor level trend? It's the daily movement of the chart. That's it, the daily movement of the chart. Okay, then we moved into how do we make it simple? And we make it simple by identifying the primary trend and then looking for trading opportunities to buy in that intermediate trend. Those are your continuations. Okay, so we kind of been building on this all week. And then I really made it simple by saying, let the computer do the work. And I introduced you to the moving averages. And I showed you how if you draw them just right, the moving average will actually draw your primary, intermediate, and minor level trend. And then I taught you the secret of moving averages. I taught you my system, the 10, 20, and 50 period. And we said when the price is above the averages, the trend is up. When the price is below the averages, the trend is down. And if the average is moving through the price action, the trend is unclear. Gave you a couple of keys. We said if there's 2 or more averages on your chart, it'll give you a moving average cross, and that signals a change in direction. And then I gave you the beginnings of a checklist. Am I above the averages or below them? Is there a moving average cross? That was day number 3. So the first 3 days of the challenge gave you the core. That is the core right there. We understand the theory, we understand the structure, we understand the trend. 3 days of the challenge. Day number 4. So what we did this week, we went through the 3-step formula. Identify the trade direction, apply an appropriate strategy, use good risk management. That's everything we talked about yesterday. And then the homework yesterday was just go practice, practice, practice. And then today we looked at finding trade candidates. Okay. So now that we've been through all that, what do? Well, you got to practice. Okay. If you want a little hand holding, then join me over at trademaestro.com, become a member. And on Sunday nights, which this will happen this Sunday night as well, we'll go live, not on YouTube, not on social media. We'll go live in a private Zoom, and you can chat with me. It's very much different environment in terms of the dynamics of the chat and whatnot. We'll go live on Sunday night. I'll do a little bit of market overview, and then I'll get into market analysis, and you can see me applying it over and over real time for active trades that are preparing for the week ahead. The use of Sunday night, the way it should be used, is as a preparatory tool. It's not I don't want you to show up and say, oh, Jeremy talked about this, I'm going to go do it. Now, people do that. I can't stop you from doing that, but I don't want you to do that. What I want you to do is come use it as a learning opportunity. This is, if you imagine going back to science when you were in school, you had the book lessons that we would have in science, and then you would have the lab. So where I went to school, Monday, Wednesday, Friday, we would learn book knowledge. And Tuesdays and Thursdays, we would jump in the lab where we actually applied it, right? That's the principle here. Profit Picks on Sunday nights is a lab, basically, where we're applying it real time, present market conditions right now. This is what's going on. That's why it's so valuable. That's why I have students that have been members for 4 years, because they love what we do in the labs on Sunday night. And they show up and they learn. It helps them set up for the week. And then here's the next thing you got to do. And this is why day 5 and 6, or excuse me, 6 and 7 are consolidated into a weekend, so you can just go practice. I taught you yesterday how to go practice. Go practice, practice, practice. If you don't have a virtual account, you need to get one where you can place trades. You can get it for free on TradingView. They're just calling practice or paper account. You can get it for free. Do that over on TradingView if you don't have another virtual account. But this is a place where you can go place your trades and you can actually practice it and see how you're doing. And then, of course, when you become a member, if you want to do that, join me for group coachings. We do that every other Wednesday night. And that's another live, dynamic, interactive experience where you can open your microphones and talk and stuff. All right, folks, there is your review of the week. We got through the first opening week of the Pick Winning Stocks Challenge. That was a lot of stuff. That's a ton of stuff. What's coming up? Next week, what we're going to do is we're going to get into strategy, and we're going to look at some different strategic ways that we can trade the market. And we'll look at next week is strategy. Then we'll get into some risk management and all the different variations of the 3-step blueprint that I shared with you. So I've given you the structure this week. We've got you going. No excuses. You got something to build from. If you haven't downloaded the cheat sheet, I think you should, just simply because, it's a PDF that has basically all your notes on there, and it's really easy to follow. Next week, same time, same place, Monday through Friday, we will be live for day 8 through 12. Day 8 through 12 next week. Monday through Friday, live, same time, same place, noon Central Time, 1 o'clock Eastern, 10 o'clock if you're over on the West Coast, right here on YouTube, right on Rumble, on Facebook. All here. If you got any questions, type them in. Otherwise, I'm going to let you guys get off to your weekend. We are right at the 1 hour mark. Can't believe we got all that in. Right at the 1 hour mark. So it has been great to be with you this week. How many of you have made it all week? Lance, are you here on Rumble? You were here 4 days in a row. Are you here today? He'll let me know here in just a minute. There's a little delay from when I talk and when you guys actually hear it. So by the time we get chat, it takes a little bit. But I hope you guys got a lot out of this week. I hope you learned a lot. I hope you got some clarity. I've had a few of you send me messages and say that it's been a great review. It's exactly what you needed. And that's fantastic. It's really great to go through something like the Pick Winning Stocks Challenge at least once a year, just so you have that review and you can kind of get back to basics. So I'm glad that we could do this together. All right, I don't see any chat in here. I'm sure Lance is going to respond momentarily, but I think it's going to be too late. I think I'm going to end it before he responds. So thank you folks for being here. I do hope you have a fantastic weekend. If you're in the Southeast where we are, we've got some terrible storms going through this weekend, and we've got a lot of flooding and tornadoes and all sorts of stuff. So if you're in this area, be safe. Bill up in Kentucky, you probably need to be safe too, my friend. And those of you in Arkansas and all these kind of middle America states. All right, folks, you have a wonderful afternoon. Have a great weekend. I wish you the best. Until next time, happy trading. We'll talk to you soon.